Yeah, it's live on YouTube also.
Good.
It's 11 a.m. and as promised, let us start the program. Team Hyderabad branch of S. 1 second, sir. I have to reduce the YouTube volume. Yeah, all set. My apologies. Team Hyderabad branch of SRC of ICI proudly welcomes a very loving professional, a very knowledgeable person, CA Murali Krishna Garu, and a very young and dynamic speaker who is making a debut today. IPL 2020 is starting in UAE on a in a vacant stadium, and Jishan is also making a debut in the 93rd program of the present committee of Hyderabad branch of SRC of ICI. I welcome both of you to this webinar, which is on documentation on auditing standards. As our Central Council member has put a message that the crux of the profession is documentation, and the standards clearly talk about the methodology. And we say that the time has started ticking for audits to come and to be executed. Friends, it is with words of wisdom from speakers like Murali Krishna sir and several others, as well as taking the clues from young speakers like Jishan who are practically into it. Many things can be learned, and we can ensure that we don't commit any mistakes and get into any sort of trouble. So today, let us start the session. And before I start the session, I just take it as a privilege to introduce the speakers. I will first go with Murali Krishna sir. CA Murali Krishna Chevuturi Garu graduated in commerce as a topper in his class in 1975 and also qualified as company secretary in 1978. He qualified as CA in 1980. He was selected to graduate award of Rotary Foundation and obtained an MBA from University of Pittsburgh, USA, specializing in finance and management information systems. He practiced as a chartered accountant from 1980 to 2009 and was senior partner, assurance and corporate advisory services in Mrs. Brahmaya and Company Chartered Accountants until September 2009. He served as a group CFO in Amar Raja Group of Companies from 2009 to 11 and is presently an independent business advisor to corporate businesses and mentor to professional CA firms. He served as secretary and chairman of Vijayawada branch of SRC of ICA during 85-88 and 88-91 respectively. He served as SRC member from 91 to 97, wherein he was secretary, vice chairman, chairman of SRC of ICA for the years 93, 94, 95. He is the convener of Finance and Taxation Panel of CAI, Andhra Pradesh 2011-12, and a co-opted member of Auditing and Assurance Standards Board of ICA for 16-17. He is a special invitee at the Accounting Standard Board of ICA for 2019 and 20. He is a speaker on various professional subjects at branch, regional, national, and international seminars and conference and other forums. Friends, he is again one person to whom we can always approach if there is any doubt in our mind. And he's always and always willing to do anything for ICA. Thank you very much, sir. I introduce Murali Krishna Garu to the August audience. Thank you very much for coming, sir. I'll also take this opportunity to introduce Jishan also, a young speaker making a debut today. Okay. Jishan has completed his chartered accountancy course as well as his CFE, and he graduated. He's also a BCom graduate. He is currently associated with M. Bhaskara and Company as audit manager since 2018 and has handled audits of listed, closely held public companies and private limited companies and non-corporate entities. He is also involved in valuation of financial securities of corporate entities, has handled assignments relating to companies in infrastructure, power, manufacturing, information technology, ITES, societies and trusts, and trading. So I present Jishan to the august audience. So after this, I think I will just leave it to the speakers of the day to take it forward. I also thank each and every one of you for joining us on a Saturday afternoon. Over to you, Murali Krishna sir. Over to you, Jishan. It's up to you. Thank you.
Thank you, Pankaj. Good morning to everyone. I must thank the Hyderabad branch for asking me to make this presentation today on documentation under the auditing standards. Whenever we talk about auditing, documentation is a given. That's been the practice because documentation is the culmination of what we do once we report it, as well as through the process of auditing. Documentation is mandatory without any exception. Without documentation, there is no auditing. There could be exceptions to auditing in the different practices, different tools, different approaches that we might make, but no documentation, no auditing, period. So let me just take you through today. The plan is that Zishan and I will be making a presentation on documentation under the auditing standards. This is going to be divided into two portions where I'll be talking about the theory of auditing standards, the mandatory theory of auditing standards. And Zishan, my young colleague who is making his debut, as Pankaj just said, today at this session, has had hands-on experience in using a tool that provides auditors a very structured approach to auditing so that it brings about a comfort and also an assurance to the auditors about the sequential approach to auditing as well as the result, and it also enables you to compare and then review and then make any corrections along the way in case the relationships between each of the steps in a good approach, I would say a scientific approach, an acceptable approach to auditing is implemented. It helps you to stitch together everything, every single step, and make sure that you arrive at the destination, which is the reporting part of it, with absolute comfort and an assurance to yourself first about the assurance that you're giving to the outside world, so that any information that you put into the audit documentation will enable a person who has no connection with the audit, who has no previous involvement in the audit, to look into it and give him an opportunity to assess the quality of the audit, the understand with the clear understanding of the approach to audit the auditor has taken, and also about the auditor's work, whether it's been done with the expected quality standards or not. So that is the way that the documentation is supposed to be made. That is the way the auditing standards have been framed. And the undoubtedly the most important standard in auditing is the documentation. When I say the most important, it's not that the others are not important. From today's point of view, I would like to emphasize that audit documentation is significant from the point of view that when an outsider sees the documentation, he understands how the entire audit has been done. It's just like seeing the financial statements. The financial statements are not the owners, the responsibility of the accountants and the financial managers alone. They are the responsibility of the entire management. They are the responsibility of the entire company. They reflect the innumerable or innumerable transactions that have been gone through by the company and that are reflected in the financial statements, the books of accounts, and so on and so forth. But ultimately, the annual financial statements reflect the state of affairs of the company, and they are the face of the company. Similarly, documentation is the face of the audit, and we have to make sure that that documentation is always prepared meticulously, presented in a logical, sequential, and understandable manner, and can be understood by whoever goes through it, just as the financial statements, when they're read by the stakeholders, are capable of being understood by the stakeholders. Audit documentation should be capable of being read and understood by the readers, whether they're reviewers or anybody else within an organization, or even by the same auditor who does it the next year and the year after. So I'll quickly take you through a small presentation. I think I might be needing about 45 minutes, or I hope to finish in less than an hour. And then Zishan also will take you through that, and then we'll have plenty of time for the questions and answers. We'll be very happy to answer any questions on these matters. Okay. Is this visible?
Yes, sir. It's
Great.
clear.
Okay, as I said, documentation is the face of the auditor. He has no option but to make it up well and keep it good too, all the time. So it's not as if you try to prepare some information while doing the audit, but you also have to make sure that the information is all made well during the course of the audit, and then it's kept well at the end of the audit, and it's kept well after the audit too, forever to come. Even though there is a certain limit that's been allowed by the regulators and by the institute with regard to the documentation, it's always safe that documentation is prepared well and it's also preserved well for a long time to come. Now let's see what are the objectives of the auditor, because that's what documentation depends on. The objective of the auditor is to obtain reasonable assurance. First, he has to obtain reasonable assurance from his audit, whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, thereby enabling the auditor to express an opinion on whether the financial statements are prepared in all material respects in accordance with an applicable financial reporting framework. So in India or anywhere in the world, there is always a financial reporting framework within which the financial statements are prepared and also based on which the auditor prepares his report. And what is it that the auditor is expected to report upon? He is expected to report upon the true and fair state of affairs of the financial statements, which is what is meant by an assurance from the auditor that there is no material misstatement in those financial statements, and the cause of the material misstatement could be either a fraud or error. And thereby, the auditor will be able to form an opinion on the reportability of the financial statements with regard to their true and fair state of affairs, or if he has any concerns or disagreements about what is presented in the financial statements, and with regard to their deviations or departures from the financial reporting framework or the regulatory framework or any other issues, accounting principles, so on and so forth, then he would also have to make sure that the accounts, the financial statements that he's reporting upon would also contain his opinions with a modification thereon. What is the modification? What's the framework? What is the report? What is fraud? What is error? What is material misstatement? All these things that you see in this paragraph, they're very clearly spelled out in the auditing standards. And they're very well and clearly laid out principles today. Now, once he himself forms an opinion, the auditor's next job is to express an opinion. The auditor expresses his opinion in the form of a report, and he communicates it as required by the standards on auditing, which will be again based on the auditor's findings, which are based, of course, upon the audit procedures that he carries on and the audit documentation that he maintains. Now, audit documentation is defined in SA 230. Audit documentation is defined as the record of audit procedures performed, relevant audit evidence obtained, and conclusions of the auditor reached. And all this audit documentation is put together in a file, in an audit file. So just for comfort and ease, let me put it this way. If you open a big Excel file, let's assume you open a big Excel file with, let me say, 100 worksheets. Each audit document can be seen as a worksheet. It's not going to be as large as what a worksheet can contain, but at the same time, look at it that way just for the sake of a perception. An audit document is like a worksheet. The audit file is like an Excel workbook. So you put all your documents together. If you're doing it physically, make sure that you put them in a sequence, in a logical order, in a manner in which you can relate it to each of the works that you have done, and make sure that it's also put together in a manner where it's possible to take you from one to the other. Like, for example, where you can easily link it to the balance sheet or the profit and loss account, and so on and so forth, or in a sequential manner which will facilitate easy reference. It can be put together in different ways. So that is left to the auditor's judgment, convenience, and practice. So you put them all together, you end up with a nice audit file. And when you put all the documentation together and you prepare the audit file, and then the reviewed by different people at different stages, and then it's signed off, the audit is done. And hopefully it's done well. So all these processes are laid out in the standards on auditing. So most of the standards on auditing, whether it is standards on auditing, when we talk about auditing, please understand it as statutory audit. Whether it is statutory audit or internal audit or the forensic audit standards which are coming up, everywhere documentation plays a very significant role. And I will now make an endeavor to take you through the various requirements as to documentation in the various standards on auditing. So that will be the way I'll go about it. And as I said earlier, Zishan will tell you how he does it hands-on, practically. And that's the way that we'll be taking you through this 2-hour seminar today. So nature and purpose of documentation. Audit documentation that meets the requirements of this SA and the specific documentation requirements of all the other relevant SAs provides evidence of the auditor's basis for conclusion. Ultimately, the quality of the auditor's work is reflected in the conclusions that he reaches at the end of the audit that he claims to have carried out, and also about the achievement of the overall objectives of the auditor, because documentation starts from the very first step and walks along with you through till the very last step of an audit. Then it also reflects the fact that evidence, by providing evidence that the audit was planned and performed in accordance with the standards on auditing and the entire applicable legal and regulatory requirements. So audit documentation serves a number of additional purposes also, which I'm giving in this slide. You can just go through this. This is basically, as I said in the course of my presentation of the previous slide, this slide talks about how audit documentation is a walk-along process where it documents every step, not just the fact that a step has been taken, but also how each step has been taken, the basis for taking each step, the conclusions at the end of each step, and if anything in that step leads you to the next step. Why is it that there is a connection between this step and the next step? And so that the entire audit process would be conducted, not only conducted in a logical manner, it would establish the fact that the audit was also conducted in a logical manner, and at the end of it, retain a record of all matters of continuing significance, not only for what has been done, but also for the future audits. It also enables the performance of the review, quality review, peer review, an external review, and in the unfortunate event of a regulatory review, that would be the first line of defense to any auditor. Now, requirement of audit documentation, timeliness is the most important thing. Audit documentation is not something that can be done after you've finished an audit. It's not like having a meal and washing your hands after that. That's not the way audit documentation has to be done. The work has to be documented at every step. Even before you commence the work in going to the client's place, even before you open that customary red pen and put the first tick on the client's records, you have to start audit documentation. Audit documentation comprises every step that the auditor involves himself in, right from planning all the way to the execution and the sign off by different people as per the structure in the planning document, or as per the structure that's the customary practice within the firm of auditors. So the form and content and extent to facilitate ease of understanding by an independent reviewer. So the significant thing here is the form, the content, and the extent of documentation should make it easy for anybody who wants to review the documentation. First, to understand how the audit has been planned, the time within which it's been executed, the extent and the approach of the audit procedures performed to comply with the standards on auditing and to fulfill all the legal and regulatory requirements. Then the outcome of the audit, which is the result. Then all the significant matters arising during the audit that have warranted or called for the auditor's judgment, attention, and conclusion, and the conclusions reached thereon, and the significant professional skill and judgment of the auditor that has been used and deployed during the course of the audit, which is the critical part of performing the audit. It also records who has performed the audit, the time spent by each of the participants in the audit process, and then the completion, the comparison for evaluation with the plan as well as the executed part of the work. And then it also establishes the responsibilities in terms of who has done each part of the work, whether it's been planned and done accordingly, who has reviewed the work within the audit team, and who has reviewed the work after it's been presented by the audit team to the external reviewer who would be part of the firm or somebody who is from outside. Then it also records the various bases for the audit documentation, which could be the significant discussions that were carried out with the management, and also the various significant matters discussed within the team, and then how the direction which they have taken, the conclusions, the recommendations, and the opinions of various members of the team in an unbiased manner. And then everything is recorded so that the entire team's outlook, the entire team's opinions, the entire team's mind is captured in the documentation, not necessarily in a verbatim manner, but at least in as detailed a manner as possible to reflect the effort that has gone into the audit process, the coordinated efforts that have gone into it, and also the outcome based on so many minds having worked on it in a structured manner and in a manner that is expected of them by the standards on auditing. The last step, as I said, is the assembly of the final audit file. That is it's the culminating end of the result of the audit. Once the audit file is prepared, it is duly reviewed and it's signed off. That's a job well done. Agreeing on the terms of audit engagements. I'll now take you through each of the standards quickly. This is SA 210. When we start an audit, it's very often the practice that we start simply based on a letter from the engagement party, the other party, the counterparty to the engagement, to which the auditor is one side of one of the parties. But it's very important that the very first step in an audit engagement is the agreement of the audit engagement, and this should be reflected by in an engagement letter which is signed off by both the parties to the audit engagement, which is the client and the auditor on either side. So it contains a number of things. So this is the objective of the scope of the audit financial statements. This also, I just for sake of mention, because I've come across many cases where audits have been commenced without a formal engagement letter. This is a very crucial step. Please make sure that this is all done without failure, and it's also recorded. So in this, all these steps that we are talking about here must be documented. The objective and scope, responsibilities of the auditor, management, the applicable financial reporting framework, reference to the expected form and content of any of the reports. All these matters should be very clearly defined. The management's confirmation of its understanding of its responsibility is something that should be very clearly spelled out in the engagement letter. And that engagement letter, which documents various significant aspects, forms the most important first step in an audit process, in an audit engagement. So that is something that we'll have to keep in mind. Then quality control, for an audit financial statements, quality is the lifeblood of an audit, because that is what is expected not only by the standards but also by the public at large, by the readers, by the stakeholders, whatever you might call them, who use those financial statements. So the objective of the auditor is to implement quality control without exception, to ensure that the audit complies with professional standards and the audit report issued is appropriate in the given circumstances. So in the quality control part of it, the auditor should document various things like issues identified with respect to compliance, conclusions on compliance, conclusions reached regarding acceptance and continuance of client relationships and audit engagements, nature and scope, and conclusions resulting from consultations undertaken during the course of the engagement. So this is what the auditor shall document. Please remember that today, in the present circumstances, no matter how large or small an audit is, a partner sign-off should also happen only after at least a detailed review, or at least even minimum essential review of the audit process, the audit documentation. So this slide talks about what the auditor shall document and what the reviewer shall document. The reviewer shall document his comfort or satisfaction with the procedures that were carried out by the firm. The engagement quality control review has been completed on or before the date of the auditor's report. This is very, very important. As I said, by the time, this is the most desirable process, and it is also mandatory. It's not just desirable. It's not something that can be on the wish list. It's something that has to be accomplished, ideally, which is that the quality control review has to be completed by the time the auditor issues his report. So let's all keep in mind that this is something that we achieve in the most effective manner, and make sure that there are no slippages on this front. And that the audit, these are the two things that have to be part of the documentation in terms of quality control. And then next, we go to the next standard. I would like to repeat for your comfort and understanding that I'm not talking about any of the audit procedures. I'm only talking about the documentation process that we have to comply with during the course of compliance with all these auditing standards, which means the documentation process that we need to comply with in the course of the entire audit process. The primary challenge that the auditor faces during the course of an audit is to make an assessment of so many things. One is the audit risk. The audit risk, major audit risk that the auditor faces is whether there is a potential fraud, or there is an opportunity for fraud, or whether there is a fraud that has occurred, or that is continuing to occur and it's going unnoticed, or a fraud that has occurred that's been taken on record by the management, but the matter is under investigation, to really understand the root cause of the fraud and the mitigating steps that have been taken to bring about any weaknesses in the control system that have allowed the fraud to occur, or that have the potential weakness to allow a fraud to occur. So when the auditor makes a documentation of the assessment of the risk, he should also document the significant decisions reached during the discussion amongst the team. The auditor has to establish on record that the possibility of a risk has been assessed, possibility of a fraud risk has been assessed, and it's been documented, and that the entire team has been made aware of the assessment process and the identified risks or the weaknesses, if any, in the control system have been clearly discussed, and also the plans to address those risks have been taken into account in the planning document and have been duly implemented during the course of the audit, and the outcomes and the conclusions reached at the end of the audit process have been duly recorded. Then documentation of the responses to the assessed risks. That's what I just spoke about. Then communications about fraud made to the management, those charged with governance, regulators, and others. So we are all aware that under the provisions of the Companies Act, Section 143(12), so on and so forth, and various other occasions under CARO, we are required to report any instances of fraud that have come to our attention. And depending upon the materiality, you take it to the attention of the management, or you take it directly to the attention of the regulator, which is the central government. And the whole process is very clearly defined now under the Companies Act 2013. And the Institute also has come out with some very, very lucid guidances on this matter. So we should go through this literature that's available and also have a very clear view of our responsibilities as we move on through the process of audit. So the important thing about the auditor's responsibility in this is to have a clear understanding on who he should communicate with in the event of a given type of fraud, a given magnitude of fraud, and a given situation in which a fraud has occurred, and then discuss the whole situation with appropriate persons and also document it appropriately to ensure that he has complied with the requirements of the law, and also if there are any specific requirements in terms of the engagement that he has entered into with a client, whether he has complied with those requirements also. Then laws and regulations, we are also aware that there is a specific portion of the auditor's report where we report on the compliances with the laws and regulations. There are many laws and regulations. Primarily, the audit report talks about compliances primarily with those laws which have a bearing on the financial statements, a direct bearing, I would say, and also provisions of various sections of the Companies Act which have a bearing on the financial statements. So these should be kept in mind, and the necessary documentation in this regard is the copies of the various records and documents, which could be minutes, which could be copies of the various updates to the laws during the current year, various contractual obligations between the company and any regulatory bodies like the listing agreement and so on and so forth. All these things should be kept in mind, and records thereof should be maintained so that it can be established that the auditor has started the audit with a clear view of what he is expected to do, and also the conclusions at the end of the compliance verification process, which are duly recorded, will ensure that the auditor can establish that the work that he is expected to do has been duly done. Then communications with those charged with governance. This is very important. This is something that we do on a continuous basis. I would only like to say one thing. This is something that, despite having been done, is likely to be done in a very unstructured manner. We should all remember to make it a habit, a mandate to ourselves to do it in a very structured manner. So we must understand what are the requirements, what are the forms of communication, what is the documentation. Requirements, we all know the requirements. We also know and we are familiar with the forms of communication. It is not necessary that there should be a record of everything should be in writing. Oral communications are also accepted. But please remember, when you make an oral communication, document it by saying that on such and such a date, at such and such a time, you have spoken to such and such a person who occupies such and such an office in the hierarchy, the organization, and the essence of the discussion was this, the response of the client was this, and this is the conclusion based on which the auditor is making this documentation. And in case there is any disagreement or difference of opinion or a carry forward of something for a subsequent discussion, all those matters should be quickly recorded there and there, like a minutes of the discussion between the auditor and the client's officers, so that at the end of it, everyone has a clear view of what has been done. And of course, whatever documentation that you make it should ideally be circulated to the client, and it should also be signed off by the client when it's an oral communication. If it's a written communication, of course, there's a written evidence of the client's side of the communication and the auditor's side of the communication. So that makes it relatively easier. So I would say preferably it's always better to reduce most of the discussions to writing, so that there will be an established record that cannot later be reneged upon or denied by either side to the whole discussion. Then documentation, of course, all these things, as I said, have to be documented meticulously. Please remember that even when you read the standards on auditing and the documentation portion of it, it is highly indicative. Most of it is left to the judgment of the auditor. The auditor, based on his own experience, based on his own systematic and structured approach to audit, would be able to form arrive at so many conclusions, form so many opinions, and form his own judgments. And as long as he follows the procedures on auditing as laid down in those standards on auditing, he would be in a very safe position, I would say. And as time passes and the experience with a given audit increases, as well as the auditor's professional experience increases, the kind of approach that he would take to an audit also gets widened. He would be able to look at it from a multidimensional perspective and be able to document, understand, conclude, and document things in different ways, which would still fit into the requirements of the standards on auditing. Joint audit. Joint audit is now becoming increasingly common, especially in large audits. So when we have a joint audit, we must remember that we are dealing with first a professional colleague of ours, a fellow member of the Institute of Chartered Accountants. So it makes that responsibility all the more onerous, that we should be very systematic, we should be very meticulous, we should be very clear in our understanding with our fellow member of the Institute, and also we together, what we enter into in terms of a joint audit mandate or an agreement or an engagement letter together with as joint auditors with the client. So that is something that has to be very clearly kept in mind. So in this process, audit planning, risk assessment, and allocation of work, responsibility and coordination among all the joint auditors, audit conclusions and reporting, communication with those charged with governance, all these matters should be very clearly documented as part of the audit documentation process. The way that you go about this is a very extensive process. This is quite clearly dealt with in the SA 600 series of standards on auditing. Go through it. Those standards are very small in size. They are not very long. In fact, most of the documents are standards on auditing are fairly brief, but there's a tremendous amount of understanding and practical implications that would be required once these things are once these standards have to be implemented in the real spirit. So when you are sitting in the position of a joint auditor, do be very careful. Please make sure that not only your interest but the interest and the reputation of your fellow member is kept in mind, because any slip on the part of one party to the joint audit could result in severe damage to the other also, and also the reputation of the profession at large. Planning and audit of financial statement. This is the most important. This is the real lifeblood of audit, because half the mind work is done. More than half the mind work should be applied to the planning of an audit of financial statements. So planning covers everything starting from the overall audit strategy, which could be based on so many things like understanding of the client's business, understanding of the management structure, understanding of the documentation that's in place, understanding of the control systems in place, understanding of the ERP in place, understanding the kind of support systems that are in place for those who prepare the financial statements. And a clear understanding of the history of the company's business and the way it has reported, an understanding of the kind of reputation it has in the market, in its business. So many factors, I would say innumerable factors have to be taken into consideration in carrying out the planning and audit of the financial statements. So the planning primarily concerns the preparation of an overall audit strategy, so which will involve everybody who is going to be part of the audit team, all the way from the top to the bottom. Every single person who is going to be drafted into the audit team will have to be made a part of it to enable them to understand in absolute detail the way that one should go about it. Then the audit plan, and the audit plan is like drawing up the initial path. It is more of a vision. And as we drive along the path, there will be so many things that could not be seen, perhaps, especially in the case of a first audit, that you might encounter along the way. So these course corrections, the avoidance of all these potholes, identification of those potholes, documenting those potholes, I would say mapping those potholes, and then documenting how you went around those potholes, or when you encountered the potholes, what exactly did you do? What are the challenges that you encountered and addressed along the way? All these matters should be very carefully documented, so that they would establish that these have been addressed properly, and also lay out a roadmap for future audits. So all these things should be very clearly understood. Planning document, once made, is not sacrosanct. It is definitely the foundation on which the entire audit edifice is built. But please remember that the structure that's going to be built on it can be altered, and where necessary, even the foundation, if it has to be modified to a certain extent, it can be modified, and it should be modified without any hesitation whatsoever. The risks of material misstatement, this, as I said, is quite a bit like the one that we spoke on frauds, but this one talks more about understanding the risk of material misstatement through an understanding of the entity and its environment. This is primarily what we talk about in short as the knowledge of the client's business. So this is what we understand in terms of the client, the business, the structure, the market presence, then the segments that are there, the product mix, the marketing strategy, the different geographies in which the client is operating, and then all the associated risks, whether there are any political risks depending upon that. Are there any liquidity risks? Are there any other risks? Are there any management risks in terms of the location of the client, so on and so forth, which are now very clearly required to be spelled out in the annual audit statements under the Unde regime, though not under the AS regime. Under the Unde regime, all these risk elements have to be very clearly spelled out. So it's not just some kind of a language. As we have the common habit of saying English, it's not English. They have enormous significance. That English has to be written in a manner that makes sense, in a manner that communicates a clear understanding on the part of the client who prepares the financial statements, as well as the auditor who signs those financial statements. So please keep that in mind. And this has to be done depending upon the size of the entity, then depending upon the complicated nature of the business or otherwise, then the experience and composition of the audit team, then the significance of a particular audit matter that needs to be carried forward to the next year, and so on and so on. So this is very important, because based on this assessment of the risk, the extent of the audit would depend on these various risk assessments, which are very crucial to the audit procedures that need to be carried out. Materiality planning, this is something I would leave to Zishan, because he will tell you in an illustrative manner on how materiality planning is done, how the overall materiality as well as the performance materiality, and these things can be done. But I would like to leave it there with one importance about its significance. Materiality is all that matters in auditing, because materiality is one of the fundamental principles in accounting, and so does it apply to auditing. We very often try to get away saying it is material without really understanding whether we have made an assessment of its materiality really or not. So please keep it in mind that materiality is very, very crucial, and I'll ask Zishan to go through it in greater detail, take you through it in greater detail. Responses to assessed risks. This is the outcome of the auditor's assessment of the risks, and then The response means what exactly is the course of action that he plans to take to make the audit effective in addressing those risks and making sure that those risks do not affect the true and fair state of view, true and fair view of the state of affairs of the company. So the auditor should document his responses, linkage of those procedures with his assessed risks, and if he uses those audit evidences about the operating effectiveness of controls, the auditor should document the conclusions reached about relying on such controls, which means the controls which are resident in the company's business. If they're reliable and the auditor wishes to rely on them, he should document the fact and also give the justification for his assessment of his reliance on those controls. And ultimately, the auditor should also document that the financial statements agree or reconcile with the underlying accounting records. This is one of the things that we specifically report in the audit report, saying that the profit and loss account and the financial statements are in agreement with the books of accounts. Evaluation of the misstatements identified during the audit. Now we are stepping into the actual execution of the audit. If the auditor during the course of his execution encounters or comes across any perceived misstatements or any mistake, he should first understand whether these misstatements are material, because all auditing standards talk about only material misstatements. Trivial misstatements do not make any impact, though they should be kept in mind for validation of the controls to ensure that they would not blow up into material misstatements later on, sometime later on. Then these misstatements, if in the aggregate have been, if they're material, whether they have been corrected or not, and then the auditor's documentation of uncorrected misstatements, if any, will have to be done in such a way that the aggregate effect is identified and quantified. Then the evaluation of the materiality level for a particular class of transactions or disclosures, the evaluation of the effect of uncorrected misstatements on the ultimate outcome of the audit, and then his judgment as to whether it should be reported or not will be based on the documentation that is made under this SA 450. Now that takes us to the 500 series of documents, which are, each one of them is talking about the documentation itself. It's like audit evidence. Everything about audit evidence is documentation. Similarly, everything about audit evidence, which is in SA 500, or is audit evidence. SA 501 is audit evidence in specific considerations for selected items. Like, for example, if you are looking at specific things, like, for example, let's say inventory, contingent liabilities, so on and so forth. What are the things there? Everything that you collect in that regard forms part of the documentation without exception. External confirmations of documentation in themselves. Internal audit, initial audit engagements, opening balances is mandatory documentation. Analytical procedures based on which you come to certain conclusions about the direction that the audit should take, about the need for substantive audit, so whether depending upon a substantive analytical procedures or selective analytical procedures, what should be the outcome? Everything is mandatorily part of the documentation. Audit sampling, again, Zishan will take you through it. SA 540 and SA 550 are the two standards in this series, which specifically talk about auditing and accounting estimates. Subsequent events, going concern, written representations, these are all things which essentially revolve around documentation, based on which very crucial judgments of the auditor have to be arrived at in reporting, because as things stand today, reporting on subsequent events, reporting on going concern is very, very crucial. And written representations relate to every one of these items, not only in this 500 series, but in every single auditing standard, in every matter that would be subject to audit. Audit evidence, as I said, this is all about documentation. Every bit of audit evidence that you get forms part of documentation, and it should be logged, it should be chronicled, and it should be systematically filed, or a reference should be made to it in some way or the other, so that it establishes that you have obtained audit evidence for every single step that's involved in the audit process. Specific considerations, as I said, we're all quite familiar with these inventory processes, litigation and claims, segment information. In these corona influenced audit situations, the guidance notes of the institute, which have been circulated already well in good time, have a very important role to play. I would urge upon all of you to please pay a lot of attention to the guidance notes of the institute, especially on inventory. A lot of guidance has been issued on the aspect of inventory, and inventory is something that is, I would say, mostly universal to all audits, especially in small audits. So do keep it in mind and then pay attention to those guidance notes. They also very clearly lay down the procedure as well as the documentation that needs to be obtained. Similarly, in litigations and claims and also segment information, these are the special considerations, specific considerations and so forth. These are the selected items that have been mentioned specifically in SA 501. So do keep it in mind. And each one of them involves a lot of documentation and conclusions that have to be reported upon, both in the main report as well as in the CARO report, as well as in the report on internal financial controls. External confirmation, this is usually something that is resorted to in the case of receivables, payables, loans, advances, borrowings, so on and so forth. The entire process of external confirmation, right from the auditor's steps, the auditor's own internal procedure for obtaining external confirmations, as well as obtaining the internal external confirmations, the conclusions that have been arrived at based on the external confirmations, the positive confirmations that you get, then the negative confirmations that are received, then the outcome of the negative confirmations, whether they have any significant impact on any of the conclusions that the auditor arrives at. All these matters have to be duly documented. Internal audit, initial audit engagements, sorry. Initial audit engagements are something that we have to keep in mind. It's not enough if you simply get a no objection certificate from the previous auditor. It's very clearly laid out in SA 510 about what steps an auditor should take in the case of initial audit engagements, primarily with regard to opening balances. The way opening balances should be dealt with, they should be verified, they should be validated, and the fact of the planning process for the verification, the validation of the documentation should be very clearly recorded there. The conclusions that have been arrived at after complying with the requirements of the standard have to be very specifically and meticulously recorded there to ensure that there is no loss of continuity in the audit procedure. The audit might change, but audit is something that goes on forever. And audit is not, the audit is always the client's audit. So whatever has happened in the client's audit so far has to be understood by every auditor who steps into the shoes of another auditor for the first time. Audit sampling, this again is something that Zishan will be able to quickly run you through. So I won't spend any time on this. Now, accounting estimates. This is something that we also come across very, very commonly, which is accounting estimates. What are the most common accounting estimates that we come across? Depreciation is an estimate. Though the depreciation rates are laid down, even the rates that are laid down in the Companies Act are based on the estimated useful lives. So if the company has a different estimate of it, it's welcome to make that change in that estimate with an appropriate disclosure and justification for those things. So these estimates should be very clearly verified by the auditor, because very often an estimate could be subject to a bias, and the management can often take advantage of an estimate to present a view which is not necessarily the true view of the state of affairs. In my experience, and generally as believed, there are three areas where accounts can be manipulated. First thing is the inventory, where the measurement of the quantity as well as the value, both of them can be manipulated very easily and with a lot of deftness. So please keep in mind that that's one area, because that's why it's considered in the special item always. And inventory is always also treated as a high risk area. So I would not say high risk area, a presumed risk area along with revenue. The second thing is depreciation, where a little bit of tweaking here and there, it could make a significant difference with regard to the date of capitalization, with regard to the rate of depreciation, with regard to the residual value, so on and so forth. It can make a significant impact on a period's financial statements. Third one is the provisions, which can be played around. So the auditor has to be very, very cautious when he deals with these three things. And this standard SA 540 talks about auditing accounting estimates, including fair value accounting estimates, which is something that is already prevalent in the Ind AS regime, and which is also coming into the AS regime very soon. All the standards AS are also being fairly closely synchronized with the Ind AS to make them harmonious with global practices. So whatever conclusions that the auditor arrives based on his evaluation of the auditing of the accounting estimates, they should be very meticulously documented so that the basis and the justification for his conclusions would be in place. Related party transactions, though these things are taken very lightly by most people, let me tell you, the related party transactions are the most troublesome aspect of an audit, especially when you come to large audits, when you come to group audits, if you're dealing with consolidated accounts, please look at the related party transactions the moment you start the audit, because they would be subject to a lot of discussion, litigation, argument, debate, disagreement, whatever word you might use. So look at the related party transactions and you look at all the cases that are in circulation that have brought so much of discomfort and pain and displeasure and disrepute to the profession today. At the core of every such single case is related party transactions. And you rest assured that every client will resist any attempt of an auditor to review, audit, question the justification, correctness, and the relationship with the business of such related party transactions. But today you have no choice. You have no choice but to examine the related party transactions through a very, very thick lens, through a lens that really magnifies them in every possible way. Come to your own conclusions. I'm not saying that you should enter into a headlong conflict with your client, but at the same time, make sure that you're not allowing the client to override your professional judgment and thereby put you at risk. Ultimately, please remember that your safety, your reputation, your survival, and that of the profession stands above everything else. And these related party transactions, in my opinion, as a professional in the last 40 years, pose the biggest challenge. So all documentation, every single possible documentation, whether it be the disclosures under Section 189, whether it be any other disclosures that are made to anybody, whether any disclosures under the Income Tax Act, whether they are disclosures that are mandatorily required by some customary practices in the company, then understanding those disclosures, whether the documentations have been, the transactions have been duly mapped or not, every one of those things have to be taken into account, and that has to be duly documented, including the written representation from the management, and preferably every related party transaction. Please make sure that it is put before the board, and also document the fact that it's being passed through the audit committee and it's also been passed by the board, and necessary approvals have been given, and where required by law, the necessary approvals by the general body also have been obtained. And please document the fact very meticulously so that it would be established that you have paid all necessary attention as an auditor to every single aspect of related party transactions, which, at the cost of repetition, I would like to say once again, should be the most attention attracting transaction in any group environment. Going concern, now all of you know that it is mandatory to express an opinion on the going concern assumption and its appropriateness to the financial statements. So now I think since 2018, 1/4/2018, we've been required to express our opinion on the appropriateness of the going concern assumption in preparing the financial statements. You will have to gather appropriate evidence on which you as an auditor can form that conclusion, and based on that, whether an agreement can be arrived at with the assumption that's been made by the management in drawing up the financial statements, that assumption, which is the going concern assumption. In the accounting standards as well as in the auditing standards, things are dealt with in very clear detail as to the going concern assumption. This is again one of the fundamental assumptions or fundamental principles, guiding principles governing the preparation of financial statements. So this has enormous significance because this is something that is being read with very I would say, rapt attention by every possible stakeholder in the business of the company. In the company, I would say, not just the business of the company, but the company per se. So this is something that requires a lot of attention. There's enough material in the auditing standards. It definitely requires as much attention as related party transactions. All the more in these tough times where even before Corona, the business environment has been really challenging. There's been a lot of insolvency activity going on. There's been a lot of adverse impact on so many businesses in the post-Corona uh, environment. So all these things have to be kept in mind in judging the appropriateness of the going concern assumption. And all the conclusions, all the documents, all the representations that have been received from the management have to be duly recorded. So as I said, written representations are, again, every single written representation from the management is mandatory documentation. When you receive a written representation, it goes without saying that the auditor also has to record his conclusions on the written representations received from the management, stating whether the matter that's subject of the written representation has enabled him to reach a conclusion, or it forms an essential part of the matter that needs to be discussed further on the same subject. So written representations are, it's like a trail mail. It's like a trail mail, and trail mails are also considered acceptable written representations. So once you start communicating or corresponding with the client, with the management on something, until a logical conclusion is reached, the entire string of written representations, which form a very crucial part of the audit evidence, they should be very diligently documented. Using the work of internal auditors, we all know that we sometimes use the work of internal auditors. We claim that internal auditors' work has been relied upon. But please remember that anything that you claim to have relied upon when it comes to the work of an internal auditor, it should be very clearly documented. The understanding between the internal auditor and the statutory auditor should be duly documented. It should not only be clearly understood, but it should also be agreed to by the statutory auditor as well as the internal auditor, and we should take it forward based on that. Otherwise, it could lead to a lot of displeasure, disagreement, litigation, and arguments between two fellow members of the institute, which doesn't augur well for the members as well as the profession. And very often the client could take advantage of the internal auditor and as well as the statutory auditor too, without any bias against the clients. I have to make this statement based on my experience in certain cases. Then communicating key audit matters. Key audit matters is again something that is now required to be reported in the audit. It does not amount to a modification to the auditor's opinion. It does not amount to a matter to which the auditor is drawing emphasis, but it is primarily intended to give the readers of the financial statements and the audit report a broad, I would say, a view from 30,000 feet of what the auditor has done. And out of that, what are the significant key audit matters that the auditor has laid emphasis on in terms of carrying out his audit? It is only indicative. It also gives the readers of the financial statements and the auditor's report a flair of what has been done by the auditor. And from a reading of the financial statements, they can also make an attempt within their limited understanding of whether the auditor has really exercised the kind of judgment in trying to link what has been reported, what has been reported upon, what has been included in the audit report in terms of key audit matters, and what has been actually included in the financial statements. So this is, as I said, this is not something that requires an adverse opinion or a comment or qualification or a disclaimer or anything in the key audit matters generally. And except for a couple of instances like the going concern assumption, the standard makes it very clear that what is either an emphasis of matter or a key audit or a qualification or modification of opinion need not necessarily form part of a key audit matter, because that is more an outcome of what is verified as a key audit matter. Relating to other information, SA 720, this is also something that has come into force from financial year starting on 1/4/2018. This talks about the various items that are contained in the annual report, other than the financial statement, like board report, report on corporate governance, board responsibility, management's risk analysis, business analysis, and various other things that companies traditionally give on their own volition. The role of the auditor is limited to ensuring to verifying and verifying the other information contained in the annual report and making sure that there is no conflict with what has been stated in the financial statements. For example, you would see that sometimes you would see an announcement saying that such and such a project has been commissioned by the Honorable Prime Minister of India. And then when you go for the audit, the company client would say, no, sorry, it's not yet ready. We have not commissioned it. And it's not been put to commercial use. Then if you put up this statement saying, they'll say, no, sir, we just started the project for a trial run and the press has misreported it. But in fact, they might have also gone on record with such things in their board minutes. They could have gone on record with it in their board report. So it should make sure that these statements are not in conflict. And if there is any conflict that the auditor finds with his audit report and what is said in the other information that's contained in the annual annual report, it is the responsibility of the auditor to document that and also to communicate with those charged with governance about those discrepancies and make sure that those things are corrected. Then, or if it's gone into circulation and the approval of the shareholders is taken to make those corrections and to make sure that there's absolute harmony between the financial statements and the other information that is contained in the financial reports. So, ladies and gentlemen, that brings me to the close of my presentation on audit documentation. I'd like to conclude with this saying that audit documentation prepares the auditor for an audit. That is step one. It records the manner in which an audit has been planned and done. It demonstrates the quality of the auditor's work. It enables the auditor to form a sound audit opinion. It forms the first and major line of defense for the auditor to answer any questions about his work. Acts as a reliable source for reference, reliance, and professional quality in the work done by an auditor. It's an audit documentation, please remember, it is not for the outside world. Audit documentation is for the auditor himself, for him to go back and understand where he started and understand where he is now, whether he is required to make course corrections, and what is the course of action that you should follow in the audits in the subsequent years that follow. And it also provides the firmest ground that the auditor can stand on ever, whether for an internal review, for an external review, for a regulator's review, or in the case of an investigation, in the case of any complaint, in any event. Audit document is the shield that will primarily fend off any challenges that an auditor is likely to face as a professional. And audit being the core of the professional activity, any activity that you do, please remember that you're recognized for your audit skills. And your audit skills should be demonstrated not only in the way you execute the work, but also in the way you document it so that others can see it. And by seeing it, they can understand what a good auditor you are. It's like your business card. It should reflect what you're capable of doing. And if somebody really appreciates from the document that you have been established as capable of doing something, the auditor's reputation will be, of course, augmented significantly. And even before that, the auditor's survival and continuance in his profession will be ensured. So thank you very much. I do hope that the audit profession will survive and thrive despite all the adversities it's facing today. You will have no disagreement with me when I say that we are going through some real tough times in terms of the questions that are being posed on the auditors as well as on the profession at large. But auditing standards and audit documentation are the prime line of defense. So let's hold on to it and let's abide by the auditing standards. Let us make sure that our documentation is good and strong, and I'm sure it will stand us in good stead all the time. Thank you very much for giving me this opportunity, and thanks for the very, very patient hearing. Thanks, Pankaj. I think you can take it over and then pass it on to Zishan.
Yeah, please. Thank
I'm
you.
sorry if I've taken a little more time than
No, sir. It was excellent. In fact, I'm telling you, one of the best speeches and one of the most important things you have done. Sir, only it gives a slight food for thought for all of us. Many people are now writing to us, asking us to say, why are you having this UDIN? Why can't you extend the date of UDIN? Why are we are very eagerly trying to get the putting pressure on getting the last day due dates extended and all these things, sir. And this is a process which happens every year. Okay, forget the COVID period and all. We are, rather than concentrating on doing the audit, doing the documentation part, taking care for our own thing, most of the time we are only worried about completing the work, finalizing the income tax return, signing and just filing the returns. And this important document, which you say is for our own self, gets ignored. One speaker, sir, had asked one simple question in a seminar to answer. He says, you work round the clock on the last day, you take so much of stress for others when they are not cooperating. What will any client of yours come and say, if something happens to you, let us assume you get a heart attack and die, will some client come and tell you, okay, you did my work, you take the fees which was due? And now today, when we just do the work without any documentation, without anything, and if we get into any problem, is some client going to come and say for us, no, my auditor was good, he asked for everything, I only did round to him, or something like that? No one is going to say. So you have very beautifully brought out the importance and nuances of documentation, sir. It is for us to take care of ourselves. No one else is going to do it for you. It is only the learned professional brothers, learned senior speakers, like Murli Krishna sir is there, Ganesh Balkrishnan sir was telling same thing, P.R. Ramesh sir, and any person, Chitale sir, please understand, everyone is telling you that we need to fasten our seat belts and be prepared and improve the quality, because tomorrow if something goes wrong, then it is we who have to safeguard ourselves, no one else is coming. So thank you very, very much for the excellent presentation, sir. Jishan, over to you, and you can take it.
Is my screen visible, sir?
Sir, questions we can take up at the end. One question, like Srinivas Rao sir, you have not put the question. I think you can just put the question, let Jishan answer, and then we'll take it up. Yes, Jishan. Right.
My screen visible, sir?
Yeah, screen is visible.
Okay, fine. Okay. So as sir has rightly concluded that the audit documentation actually prepares the auditor for an audit. So it is not for the outside parties. The users of the financial statement will not come and see the documentation, but our own audit EQCR partner or maybe the peer reviewer will come and audit this documentation. So it is only for ourselves. This is only for our own profession actually. So now, by now we have understood the objective of this documentation, and sir has taken you through most of the standards on auditing, and each auditing standard requires some or the other documentation in some way. So we have understood what are the requirements of each of these standards, the importance of this documentation. So now we'll see how this documentation has to be done in a structured manner. So that is more important. So we know the standards on auditing, we know the requirements of each of these standards, but how it has to be done also is to be understood now. So we'll go through the practical approach on how our organization follows this documentation from the start of the audit, that is from the acceptance of the audit engagement till the conclusion of the audit. So the audit documentation is not a one-time activity. So it has to be followed from the inception till the conclusion of the audit. So that is why people face difficulty. Normally, most of the organizations, most of the CA firms, what they do, once they sign the financials, then they start working on the documentation. So that will give them a difficult task to do the documentation. If you continue the documentation process from the inception till the conclusion, so that won't add on an extra burden to you. and that will give you the more structured way of doing the audit, and that give us the more satisfaction to complete the audit. And also this will add quality to our audit as well. So let us go and understand how we practically do it. So I'll take just 15-20 minutes to complete this presentation. And after that, we'll have a walkthrough of the audit tool, what we use in our organization, and then we'll understand how it works. So this is the broad category. I have divided into some of 7-8 steps in which we may perform the audit. So initially we'll start off with the appointment and acceptance procedures. So there are different things which needs to be complied in this category. So once the acceptance is complete, then we will move on to the planning section. We'll define the overall audit strategy. We'll have an overall audit plan. We'll calculate the materiality, and we'll see the terms of the engagement. And once the same is done, we'll then again move on to the understanding the client's business. So after the understanding of the client's business is over, then we'll move on to the risk assessment process, which is critical here. So we need to identify areas which are assessed as risk of material misstatement, and then we'll define the audit procedures through which we may address those risk of material misstatements. And once that is done, then we'll take the trial balance, we'll perform the journal entry testing, and we'll see the going concern, appropriateness of the entity. We'll see if there are any subsequent events which could impact our reporting. And then once this trial balance testing is over, we'll start off with the audit of the financial statements for each of the balance sheet area and the profit and loss account. And once that is done, we'll move on to the disclosure requirements. So there are various disclosure requirements, such as your CARO disclosures, your Schedule 3 disclosures. So those things has to be complied in the disclosure section. So once that is done, we'll conclude our audit with the final review, and we'll give the concluding remarks for the entire audit. So this is the basic structure in which we should proceed with the audit of any financial statements. And now the documentation process will not change whether we are doing an India's audit or the IGAP audit. Only the size of the documentation may change depending upon the size of the entity. Your appointment, planning, understanding, risk assessment will not change irrespective of the IGAP audit or the India's audit. All these processes will remain same. And when it comes to your current audit file, so for each of the audit area, you'll have different we have different programs designed for each of the audit areas, such as your property, plant and equipment, or you can take your income or the cash and bank balances or the trade receivables. So these can be tailor made subject to the size of the entity or the requirements of the audit. So that we'll see in the subsequent slides now. So now first step is the appointment and acceptance. So I'll not go in detail into the requirements of those standards, because we have already seen what Sir has told, the requirements from each of these standards. And then we'll see what actually the checklist asks about. If we go and see the appointment and acceptance section, so the first part is your client acceptance and continuation checklist. So we have a checklist wherein we have various questions wherein to answer. So once we answer all those questions, so at the end of that particular checklist, you will be able to conclude whether you will be able to accept the engagement, or if you are the existing auditor, whether you will be able to continue the engagement for this year audit as well. And this client acceptance and continuation engagement, this is not a one-time activity. Suppose if you have been appointed as an auditor of the company for say 5 years, and you have done this routine for first year, then you also require to do this same routine for the next year as well. So there may be changes in the entity's operations, or maybe ownership and other things in the subsequent years as well. So this activity has to be performed for the audit of each and every year. So basically, these are some of the items which we will go through. So when we are accepting the client, accepting the engagement or continuing the engagement, we'll see some of these factors like the environment in which the client operates. So we'll try to understand whether are there any special regulatory requirements from any of the regulatory authority, or the industry in which the entity is operating. If there are any economic breakdowns in that entity, then we'll try to understand and see the impact on our reporting, whether we can accept the engagement or not. Then the second thing is the ownership and the management of the entity. So we should be able to identify the ultimate owners of the entity. So that will give us more clarity, and the changes in the ownership in the last maybe 2-3 years. So that will show us the integrity of the business owners as well. Then you can see the changes in the key managerial personnel of the entity. And then the third thing is the users of the financial statements. So this will give us more clarity on what we are reporting and to whom we are reporting. So maybe in case of some larger organizations, the banks or regulatory authorities may be the ultimate users of the financial statements. And if you take the privately owned entities, only the management or the one or two shareholders of the entity would be the users of the financial statement. So this will help us in planning our audit in the subsequent steps. Then subsequent thing is the financial condition of the entity. So try and evaluate the going concern appropriateness of the entity at this stage while having a discussion with the client, and see if there are whatever the projects they are doing right now. So the see the viability, financial viability of those projects, and evaluate whether the business will continue as a going concern or not. Then you see if there are any special accounting policies for that particular organization, and go through the reports of the earlier auditors if this is the first time when you are going to accept this audit. So that will help you in understanding the approach of the client, and see if there are any significant transaction with related parties. So as sir has already spoken in the earlier session that related party transactions are very critical in doing the audit of the financial statement. So we need to understand the significance of those related party transactions. And then you understand if there are any complex accounting transactions. So this will help you in evaluating whether you can accept the engagement or you will continue the engagement. And the last thing is from the firm's point of view, from the independence point of view, and you can see the competence of the team, whether you have the relevant expertise available in your organization, or if not, then you can go for the consultation from the other experts as well. So based on these things, you can conclude whether you will be able to accept the engagement or not. Then we'll move on to the auditor's appointment. This is in case of the first time appointment. If you are already an auditor of the company, then you'll just have an engagement letter, and then you'll proceed with the planning. And the third thing is the points brought forward from the previous audit. So if there are any open issues from the last year's audit, that has to be brought forward to the current year audit file. So this is the step one in which we have completed the appointment and acceptance procedures. Once this is done, we'll second move on to the planning. So this is more critical, as sir has also said. So in this, we'll define the overall audit strategy and also the audit plan. And this plan may undergo change based on the subsequent, if we have come across any instances where we feel that planning has to be changed, then we may come back to this overall audit strategy, and we may change some of the audit plans or audit strategies here. So basically, the audit strategy will cover following aspects. These are only some of the aspects. So let me take you through this. So audit strategy will cover the scope and terms of the engagement. So this will give us clarity on what is required to be reported, what is the scope of the audit engagement, and what are the terms of the audit engagement, and it is in accordance with which regulations. Then the second thing is your review of independence. Our compliance with the ethical requirements is also critical. And the next thing is your review of laws and regulatory requirements. So see what are all the laws and regulations which are applicable to the entity, what does the impact of those laws and regulations is on the entity, and see if there are any changes in the industry conditions or the business environment. This will help you in defining your audit strategy. If there are any changes in the industry condition, your audit strategy may undergo a change. And then you see the extent of reliance on the work of the internal auditor. All those things we have already discussed, but you just have to when it comes to the audit strategy, you need to see the extent of reliance what you are making on the internal auditor or the auditor expert or any other service organizations. Then there may be some special audit requirements like confirmation from the banks or lenders, or in some cases you will have to get the compliance certificate from the company secretary, or the validation of the management estimates, director declarations. All these are critical in your audit strategy. And then the last thing is your review of the appropriateness of going concern of the entity. So once the audit strategy is complete, we'll go for the audit plan. So as part of the audit plan, we'll do the preliminary analytical review of the entity. We'll take the trial balance or the initial financial statements, whatever they give the draft version. We'll do the analytical review of various group balances of different accounts, and then we'll see of the some of the variances, and we'll try to understand at the group level the reasons for movement under each head of account. And then we'll review the related parties transactions, and we'll understand whether these have been done at the arm's length price, and whether the proper disclosures have been made in the prior years or not. And we'll see how the organizations identify the related parties and how do they disclose them. And will the director declarations will also help us in identifying some of the related parties. And then subsequently we'll go to the review of risk, including fraud risk. This will get covered in SA 240 as well. And then we'll see the nature of testing required. So at the planning level, we'll see what kind of testing would be required for some of the areas. Maybe we may be performing substantive testing for some of the areas, and we may be doing some analytical testing. And then the sampling techniques, what kind of sampling techniques we may be using for doing the audit. It may be a judgmental sampling techniques, or we have some different sampling tools which we'd be using to the while doing the audit. Then the thing is the identification of the engagement team. So at the start of the audit, we need to identify the engagement team. We need to have the relevant expertise in the audit team so that the audit is complete in all aspects. Then the last is the clause for the amendment to the plan. If there are any amendments you feel has to be made to the original audit plan, then you can come back here and make the amendments to the original audit plan. So once the overall audit strategy and overall audit plan is complete, then we'll move on to this permanent audit file review. So this is this file will be there on your this file will be there with you for each and every year. So once you update this file, this will become your permanent audit file, and this will continue as part of your along with your current audit file. So if you are doing the audit for the first time, I think this will take some time to compile all this information. So once it is compiled, so this will be continued for each and every year from year one onwards. So basically your permanent audit file will cover the entire background information of the entity and some various other aspects. So such as your statutory information, which is the list of shareholders, directors, the MOA and AOA of the company. Then you'll have the company and business information, which basically covers the principal activity of the company, the client location, the history, and the engagement details such as your auditor appointment acceptance, your engagement letter. So if you are providing any non-audit services, that will include here in the engagement details. And the audit operating information, the address of the principal activity of the company and where the accounting function is actually carried out. And the laws and regulations. So what are all the laws applicable to the entity? If there are any notices or litigation with some different authorities, those things will come up here. And the taxation details, direct and indirect tax. So you will get the list of all the registration from the various direct and indirect tax registrations. You will document it here, and then you will summarize all the notices received from various tax authorities. That will be part of your permanent audit file. And also your copy of final accounts from last previous year, and your copy of audit reports, or the legal agreements from with legal agreements with your customers or the vendors. So this permanent audit file will help the people who are doing the audit. Maybe next year you might not be there, somebody else will be doing the audit. So all this file will help the other team members to understand the client background information in detail, and this will help in planning the audit properly actually. So apart from this overall audit strategy and your permanent audit file review, we have some other sections in planning as well. That is your materiality. So we'll calculate materiality at this level. If you have the draft trial balance with you, then based on the draft numbers, we may calculate the planning materiality and also the performance materiality. And then we'll see the staff assignments. We'll assign at this planning stage, we may assign the different areas to the different staff. Like you might be doing the audit of some India's balance sheet, then you might assign some PP, cash and bank trial balance to some of the article, and you might assign the income and some other procurement part to the other audit manager. So those assignments has to be done at the planning level itself, so that when you start executing the audit, so it will be easier for the entire engagement team. They'll have the clarity on what is to be done and what is to be reported. So that won't create a mess when you start the audit. So the next thing is your time budget. So you will be allocating the time for each of the area. You may be allocating some 10-20 hours for your planning section, And then for each of the audit area of the balance sheet and the P&L, we'll assign different time budgets, and that this may undergo a change definitely, but you will have at least an overall understanding of how much time will it take for you to complete this audit. So then in case of joint audit engagement, then we have a different checklist here just to understand how the joint engagement process is being carried out. And then if we are using the work of an audit expert or any other service organization or any other auditor, so we have different checklists for this, the use of their work, how we are going to document all these things as part of our planning. So we have completed our two sections. One was the appointment and acceptance, and the second thing was the planning. And once the planning is complete, then we'll try and understand the client's business. So we'll have a discussion with the management and we'll try and understand how the entity is operating. So the nature of the entity's business, we'll try to see that thing. So we'll see if there are any changes in the business of the entity, and if there are any changes to the accounting or the management information or the control systems, because this will help us in understanding the entity's business in detail, and we'll evaluate the adequacy of the accounting systems. So while doing these things, we'll carry out a walkthrough of all the significant accounting systems of the entity, and we'll ensure that such walkthroughs are planned as part of our audit procedures. So either we may carry out a walkthrough of these things, or when we are performing the audit of each particular area, so as part of our audit procedures, if we are completing those things, then that ultimately that will be that objective will get achieved actually. And the last thing is the what risk the client has identified and how these are addressed by the management. So management may identify some of the areas as maybe a fraud risk areas, and they have a different risk assessment process. So we'll try and understand what risk they have identified to their business and how they are going to address this risk. So this will help us in understanding and evaluating their internal controls as well. So once the understanding of the client's business is done, then we'll look at the background information. Background information will basically cover the entire details of the company since inception till date. So what are all the different projects they have handled, and what nature of activity they are into, what are their different business locations. All these will form part of this background information. And then key business processes. So key business processes, basically the RCMs won't be there in every organization. So we'll have to understand depending upon the size of the entity. Maybe some larger organizations such as listed companies, they would have the RCMs for each of these following areas. So they have some controls in place. So we need to understand that from the company's point of view, we'll see if they have the RCM in place, then we'll go and understand their business processes for each of the following areas. Or if they don't have any RCMs in place, then we'll see what actually they are following. So they may be having some controls, but those may not be in writing, or those may not be documented. But we'll try and understand and document those business processes by understanding from the company. And the last thing is your related party transactions. So how the management is going to identify the related party transactions, and what is the nature of relationship with the related parties, and what are the nature of transactions with them. So we'll try and understand all those things, and we'll see whether these transactions are being done at the arm's length price. So once this is done, we'll start off with our risk assessment process. So before we go on to the risk assessment, we'll have a discussion with the management or those charged with governance regarding the fraud risk assessment, how they are assessing this thing. So we'll have some basic discussions with them that what are the financial statement areas which they feel are susceptible to fraud, and particularly with respect to the revenue recognition, whether the management feels that there is a risk in revenue recognition, and what if we as an auditor presume, because SA 240 says that there is a presumed risk of material misstatement in revenue recognition. So we'll try and understand from the management point of view as well, and then we'll see if there are any possibilities of management overhead of controls, and we'll see the identity of the related parties and etc. And we'll see the ethical code of conduct. So what are the different policies in place in the company, maybe such as whistleblower policies and other things, whether the employees of the company can report fraud, to whom they can report fraud, and who is the authority who will be addressing to these employee complaints and other things. And then we'll see the fraud assessment process, whether the management, they have a formal fraud assessment process or an informal fraud assessment process, and how they are addressing all these things in the company. And then the actual frauds, if there are any actual frauds during the year, we'll have to ask the management. Then if they have the actual frauds during the year, then they will tell us what they have, how they have addressed to those frauds, and how they have identified those frauds. Then your related parties, the identity, nature of relationship, and these transactions. Then we'll meet with the operating personnel for each department, and we'll try and understand their roles and responsibilities. So this will also help us in doing the risk assessment process, and then meeting with the internal auditor. So once the discussion is over, we'll go and we'll try and evaluate the controls in the organization. So we'll document the controls that exist, and also evaluate the design and effectiveness for some of the following items. For say, property, plant, and equipment. If you take this particular area, so what is the process? What are the controls? Behind the procurement of the assets, and what is the control behind the calculating the depreciation? So there are different items for which there are different controls for each of the balance sheet items. Let's say investments, whether investments can be made, how it is being made, whether there is a process of approval from the board, and then whether they have any designated investments wherein they can only have those things. So all these things can be understood by evaluating the controls of the entity. So we need to evaluate the controls for each of these things, like investments, inventory, your trade receivables, your payroll, your revenue, your treasury. So we'll go through, we'll have a walkthrough of each of these cycle, and we'll see the controls in place, whether all those things are documented, and we'll see the design and effectiveness of the same. And we'll see the control over the related party transaction. This is also critical. So generally, in most of the cases, the management will have the control over these transactions. So we'll try and understand if there are any override of controls in these related party transactions or the disclosure things. And the next thing is your management override of control. So how do we address these things? Management override of control. So you may be performing the following things to just check for override of controls. We may do the general entry testing at the year end to see if there are any unusual general entries passed at the year end. So this will give us an idea if there are any management override of controls. And also we can identify some of the non-routine transactions and test them to ensure that there is no override of control. So non-routine transactions which are not in the ordinary course of business. So based on your review of the financial statements, if you find that there are some non-routine transactions, then see the backup for that and see the reasons why those transactions have happened. Then this will give us an idea whether there is an override of control of the by the management. So after the control evaluation, then we'll move on to the internal audit evaluation. So this may not be applicable in many entities. For smaller entities, they won't be having an internal audit function or the internal auditor. So in very few cases, you'll have this internal audit function in the entity. So we'll see if they have an internal audit function. We'll try and obtain an understanding of the internal audit functions, and we'll see whether the operational management have influences either on the internal auditor or the internal audit head in the entity. So this will give us an idea about the internal audit function of the entity. And then if we are going to use the work of the internal auditor, then we have to communicate what exactly we are using from their report. So we need to communicate about a planned use of work of the internal auditors to the management also, and to those charged with governance. And if we are relying on the work of the internal auditor, we may perform some of the procedures on the work done by the internal auditor to ensure that what we have relied on is adequate for our audit purposes. And then we'll move on to the assessment of fraud. Most of these things were discussed earlier. So the professional skepticism is important when it comes to the assessment of fraud. So auditor has to maintain integrity and try and understand how those charged with governance have oversight of the management. Who is managing the business activity of the company? Are those charged with governance directly involved in the business activity of the company, or they are just overseeing the management? And then identification and assessment of risk of material misstatement due to fraud at the financial statement level, and also at the assertion level for various class of transactions or the account balances and disclosure. And then the next thing is your presumed risk of fraud in revenue recognition. So there are two things here. So if you feel that there is a presumed risk of fraud in revenue recognition, then we need to define the audit procedures and we need to perform those procedures and address this presumed risk of material misstatement. And if you feel that there is no revenue recognition, there is no risk of fraud in revenue recognition, then we need to document the reasons for the same. And the second thing is the responses to the assessed risk of material misstatement. So how we are going to respond to the assessed risk, that we'll see. I'll show you in the automation tool what we do. And we have the audit evidence. So if you have come across any instance of fraud, then you need to document those things and see whether you are able to continue the engagement or not. If you are unable to continue the engagement, then the same has to be communicated to the management and those charged with governance. And at this stage, if you have to decide, then you need to communicate whether you will be able to continue the engagement or not. Then and this in with respect to the SA 240 assessment of fraud, some of these following documentation is very crucial here. So identified and assessed risk of material misstatement due to fraud at the financial statement level. So we need to document what all risk of material misstatement we have identified at the financial statement level and also at the assertion level. So we need to document and assess these things, and the overall responses to these risk has to be documented, and the nature, timing, and extent of audit procedures what we have performed. And we should link the respective audit procedures what we have performed for these assessed risk to the respective areas, and the results of these audit procedures, including those designed to address the risk of management overhead of controls. And the final is here the reasons for concluding that risk of material misstatement due to fraud related to revenue recognition is not applicable. If you feel that there is no such risk, then you need to mention the reasons for the same in your as part of your documentation here. And then we'll move on to the trial balance and adjustment section. So we'll take the trial balance, we'll perform the general entry testing. So we have the various programs and checklists for each of these areas. So we'll do the general entry testing, we'll go through the entire trial balance. We have a program designed for this, which will cover the entire review of the trial balance. Then in case of the initial engagements, we'll review the opening balances also. We'll see the going concern appropriateness. Again, for this, we have a different checklist. Then we'll see the fair value and estimates, and then subsequent events review. So once this entire process is complete, then our the actual audit begins here. So this is your actual audit. So now we'll be doing the current audit of the entity, the audit of the balance sheet and the profit and loss account. So this is just a sample of items which I have kept here. So once the entire planning, risk assessment, and your trial balance review is over, then you will move on to the each of the area. So say suppose if you are doing the audit of property, plant, and equipment. So for this thing, we'll have a different audit program for this. So we'll take the schedule, the first part as part of the documentation for this particular area would be your lead schedule, which will give you the balances of all the items such as your maybe plant and machinery, land, buildings, or other things. So this will have a lead schedule first, and then we'll have the audit program, which will have various tests, such as if you have additions or deletions in your fixed asset register. So we have different tests to be performed, and we'll link up these things with the work papers, whatever we have. So we'll see this thing practically on the automation tool and understand how it is being done. So for each of the audit area, we have a standardized program, and also this program can be tailored made based on the requirements of each of the audit. Like say, in case of property, plant, and equipment, you might not have the additions or deletions during the year. So you may not have to perform all those tests. So you can just inactive all those things, and you can only perform the other test. So these all audit programs can be tailored made to suit the requirements of each of the audit. And then once the audit of the balance sheet and penal items is over, we have various disclosure requirements also as part of the audit. So we have a CARO disclosure, and we need to comply with the requirements of Schedule 3 as well. So these all checklists will cover the entire requirements of those respective Schedule 3 and maybe CARO, and the management letter review checklist, and you have a cash flow checklist. So these all will cover the entire disclosure requirements. And once this disclosure checklists are complete, we'll finally move on to the review and completion part. So once the entire planning is over, once the entire fieldwork is over, the manager will review the entire thing, and then he will sign off from his end. and then the partner will review the entire audit file, and then he will sign off with his concluding remarks. And once that is done, the EQCR will review the checklist, will review the entire audit file, and he will give his concluding remarks, and then we'll have a calling over checklist which summarizes the entire audit. And then if there are any points to be carried forwarded to the subsequent audits, then we'll document this, and this will get again carried forward to the next year audit file. So this is basically the broad structure of your audit. So now I'll just have a walkthrough in the audit automation tool about how we actually do these things as part of our audit.
Zishan,
Yes, sir.
Pankaj, I'll just take a couple of seconds.
Yes,
See,
sir, sure.
I've advised Zishan to take you through this audit tool so that people will have an idea about how the whole process can be captured by using an audit tool. There is no intention to promote this audit tool or to yeah. So let's make it very clear to everybody. The audit documentation is something that should be left to the judgment of the professional carrying out the audit. But Zishan, having done it through this audit tool, which we are also trying out, we have we have no bias for or against that. This is not a promotional activity. This is purely a professional, I would say, an exposition of what Zishan has acquired as a user of the tool and the usefulness that he has found in that. Thank you, Zishan. Go ahead, please.
Yes. Yes. So is it visible, sir?
Yes, Jishan, it started screen share.
Yeah. So we have already seen all these things in the PPT now. So we'll just have a walkthrough.
Like, Jishan,
Yes, sir.
saying that Jishan has started screen sharing, but if you are seeing something on the screen, then it's not visible.
No, I could. I'm not able to see anything on my screen. I've opened this.
What is happening? We are able to see only Jishan has started screen sharing.
Okay.
Maybe if you can move one or two slides.
Did you stop sharing the previous one, Zishan?
Yes, sir. I've stopped sharing that and I've again done it now.
Go ahead, please.
So is it visible now?
Not yet.
Same Jishan started screen sharing.
Okay, but I don't know then.
Is it coming on your screen?
Yes, it is coming on my screen, sir.
तो वो स्क्रीन अगर जो आपका है ना उसको ऐसे रहने दीजिए.
Okay.
अब do stop share and then start share. Now you share screen. Right.
Okay. Okay, sir. So this is the audit automation tool what we follow in our organization. So it is not compulsory for everybody to have the automation tool. You might have the Word and Excel files defining all these procedures, whatever we have discussed earlier in the presentation. So those things you can have in your Excel and Word file also to be part of your documentation. This audit automation is not compulsory. The objective of the documentation should be complete, whether you do it in an audit automation tool or whether you are doing it in an Excel sheet or the Word document, and then we have the final signatures from the respective managers and the partners. So I'll just take you through this thing. So once we start off with the audit, we have seen all these things in detail sometimes back. So we'll see. So for this client acceptance and continuation, so we have designed a detailed checklist for this. So we need to answer each and everything here. So I'll take you through some of these questions like client matters relating to legal and regulatory requirements. So has client frequently changed the auditors in the past? So all these questions will help you in evaluating the acceptance of the engagement. So these all questions are relevant for you. So this is not the hard and fast rule to answer to have all these questions in place as part of your acceptance and continuation procedure. But we have defined all these steps that once we answer all these things, then we'll be able to conclude on whether to accept and continue the engagement. So this is how it is. Has the client frequently changed the auditors in the past? And if they have changed, yes, then you need to note down the reasons for the change in auditors. This will help you in evaluating these things. And is the client involved with significant litigation, or has this been the case in the past? So this entire checklist has been prepared in detail. So this has been done over the period of time. This is not a one-day task. So over the experience, we have defined all these questions in our checklist. So if you see from firm's point of view, whether will the client account for the 15% or more of the firm income, and all these things has to be answered. So this is one of the checklists for your client acceptance and continuation questionnaire. So the same way it goes on with the planning section as well. So in planning again, you have materiality, you have the staff assignments, and then you have the permanent audit file review checklist, and you have the permanent audit file record as well here. So if you go through this permanent audit file review checklist, so this will cover in detail about each and every aspect of the entire background information of the company. So your permanent audit file record will basically cover these things, the statutory information of the company, and then it goes on to the background information, company and business information. Then you'll have the engagement details. Then you will have some audit operating information, then the laws and regulations. So this will move on in a sequential manner. So we need to document each and everything. We need to give our comments for each of these questions, and give reference to the supporting documents or the working papers, whatever we have to this each of these items wherever applicable. So this is how it goes. So it gives us a proper structure and proper flow, the way in which audit has to be performed. So this gives us more proper understanding of the organizations as well. And when it comes to the understanding of the client business, as I've earlier told that there are key business processes. So for each of the business process, you need to document the each key component. Like for revenue recognition, you have different key components, and what are the key controls by the management, and how do we test all those controls. All these things can be done here as part of this year key business processes. So that can be done here. And then your risk assessment process will start. So we have gone through in detail about all these things. So these checklists contains more detailed questions, which basically covers the requirements of your standards on auditing, your internal audit evaluation, your assessment of fraud. So this will cover entire SA 240, and your preliminary analytical review checklist, and your overall analytical review. So this will give us the comparative balances of the different periods, and we need to document the reasons for movement in the balances. If the movement is more than the materiality limit, then they will highlight that thing. Then we need to document the reasons for those variances here. And then you have based on the key business processes, you would identify some of the areas as audit risk areas. So that list will come out here. So for each of the audit risk area, you need to define the procedures. What are all the audit procedures? So say for payroll, you feel that there is an audit risk in payroll with respect to the ghost employees. So what are all the steps you will be performing to address this audit risk? You need to define those procedures here, or you can link these procedures to your current audit program. So when you are doing the audit of the expenditure or the payroll, so there you can perform that particular procedures, and you can link that thing to your audit risk. And at the conclusion of the audit, you can give your concluding remarks by linking the audit procedures what you have performed at the expenditure level to this identified audit risk. And then if you are the auditor of the company from previous year, then you can go for this trend analysis and see the movement in the account balances and the trend graphs and other things. And then you have this trial balance and adjustment. So we have various programs in detail. Suppose if you take the trial balance audit program, So we have the trial balance, but what has to be reviewed in trial balance has to be understood. So this program basically covers the entire review of the trial balance from opening balances till the closing balances, and if there are any other transactions which you can observe in the trial balance. So this checklist or program will basically cover the entire review of your trial balance. So in the same way, we have audit programs for either your general entry testing or your going concern review or your fair value and estimates and the subsequent events review. So once this is done,
Zishan,
yes, sir.
I think you should also talk a little about those assertions column.
Okay.
The assertions in the assertions column.
Yes, sir. I'll just.
That is the conclusion, isn't it? This is the
Correct.
procedure. That's the conclusion.
Yes, sir.
Right.
I'll take that in the current audit file. So,
sure. Go ahead.
Yeah. So we haven't uploaded the trial balance here, so we are unable to access the current audit file, and we have designed this tool in such a way that once we complete the planning section and sign off, then only we'll be able to proceed to the current audit file. So that's how we have designed this in such a way so that the planning should not be skipped actually. So once the planning is done and sign off, then we'll move on to the current audit file. So once we go to this, I'll show you some of the PDF files on how we audit each of the areas, wherein I'll tell you how the assertions are addressed over there. And once that is done, we have some various checklists relating to the disclosures. Again, these are also in detail, covering all the requirements of your Schedule 3. Each and every requirement of it is the balance sheet in vertical format are the headings of the balance sheet. So you will not miss out on either complying with the requirements and also on the documentation part. So you will be complying with the Schedule 3 requirements, and also you'll be documenting everything, whatever is complied by you. And the same goes with your review and completion as well. So all these review checklists will cover your review of the entire audit file and how we are going to give our concluding remarks. So now I'll just take you through this current audit file for one of the audit area, and we'll see how we have designed the entire program and how we are addressing various assertions there. I'll just stop sharing this particular slide, and I will open that PDF.
Thank you, Jishan.
Yes, sir. Just a moment. I'm just opening it.
Any help you need, Jishan, for sharing it?
No, sir. I'm just trying. Is it
no problem. No problem.
Is it visible now?
Yes, it is visible.
Okay.
But Jishan,
yes, sir.
अगर थोड़ा इसका font बढ़ा सकते हैं तो देखो, because many people had written कि they are unable to see. हाँ.
Now it is able to see, sir.
Yes. Because earlier, though I was able to see, but I got few comments and I asked them to, I gave them the YouTube link. But I think जितना आप maximum बढ़ा सकते हैं बढ़ा दीजिए, so that some people who are watching on phones, it will be useful. Okay.
Is this okay?
Yes, it is okay.
मेरे लिए okay. Yes, perfect.
So this is actually the conclusion remarks for the planning section. So once we complete the planning documentation, so this is how the conclusions are given by the management and then are concurred by the partner. So manager's conclusion would be the work carried out in this section has been satisfactorily completed, and in my opinion, the planned audit procedures have been properly tailored and will provide the sufficient reliable evidence on which to form the audit opinion. And I have carried out a review of the working papers in this section, and subject to the notes for partners' attention, I agree that risk assessment has been carried out and any specific issues arising have been covered in the audit plan. So this is how the planning section is concluded once the entire working papers and other things are complete with respect to the planning. So this is how it is concluded. And once the same is done by the manager, the partner will review it and he will give his concluding remarks in this manner. So see, I have reviewed the planning section and consider that the audit work has been planned so as to perform the audit in an effective manner. So once this is concluded by the manager and the partner, then we'll move on to the current audit file. I just told you that I'll take you through the audit program of income. So this is how it is being structured. This is only an example for the income section of one of the company. So at the start of this particular program, we have the objective of the entire audit program. What is the objective, then how different assertions are being addressed by performing the following steps, which we'll see now. So these are the primary objective, that all goods and services rendered in this period are invoiced and are included in the financial statement. So there are various assertions which are addressed here by. So once we comply with the entire audit programs, this objective will get primarily fulfilled. And once we understood the objective of this section, then we'll move on to the index. So this is how the each audit area has to be documented. So first will come your lead schedule, so that will give you the account balances, and then you will have the audit program detailing the tests to be performed, and then you will have some of the working papers. So whatever working papers you have for each of the area, so you can attach those working papers after the audit program, and that referencing of the working papers has to be given in the audit program. So if the partner has to review this particular audit area, so without your presence, you should be able to review it based on the audit program, based on the links and references, whatever you give for each of your audit test, what you perform. And this is the conclusion for this particular area. So the work carried out in this section has been satisfactorily completed and recorded, and subject to the notes for the partners and managers' attention. In my opinion, audit assertions have been satisfied. So this is how for each of the particular area we give the senior will give this conclusion, and the manager will give, and the partner will concur with these conclusions, and we'll close area by area. This is how we go in the current audit. And this is your lead schedule. The first thing is your lead schedule. Then comes your audit program. So for each of the tests, we have the various assumptions and various objectives. So we had seen these 9 objectives of these particular sections. So for each test, for each particular test, what is the objective which is being achieved, and what are the assumptions which are being addressed here. So for each test will give us an idea, and these programs can be tailor made for your each of the client. And if you see this testing of controls, now when at the time of planning, so we have gone through some of the controls related to revenue, sales and receivables, and we wanted to test some of those controls. So as part of this test under this program, so we are addressing that particular key control test also. So if you see here, the link is given to the key business processes sales. So now our command is key business process is identified along with significant risk and related key controls. So we have identified this as a risk, and the key controls have been tested, and the risk assessment has been performed. So we have concluded that the key controls are found to be effective. So in this way, we are addressing our risk, whatever we have identified at the planning stage. And we move on the same way. And this because for every company has different nature of revenue, so we have tailored made this verification of the entire sales based on the nature of this entity. So all these steps from question number 11, we have modified it based on the nature of the industry. So suppose if you see this particular step, check the mode of billing, whether it is fixed rate or T&M method, all those things. So this will address your assertions here. And if you have any work papers, if you have done any workings or the calculation, so you give the reference for that particular working at for every test actually. So this is how it goes. So it covers your entire income schedule, and wherever you feel, suppose if there are no investments in the company and there is no interest income in the company, then you can inactive all those things, and this you won't have to answer these things again. So if it is if these line items are there in your trial balance, based on the review of your trial balance, you can tailor made your all the audit programs. So this is how the audit program is completed, and this for this presentation and disclosures, as we have seen that in the disclosure checklist for the schedule 3. So when we are complying with the schedule 3 disclosure requirements, the same thing, the reference of that will give it in the audit programs also, just to have a link of whether the compliance is made with the Ind AS and also with the schedule 3 requirements. So this is with respect to the audit area. So in the same manner, we'll do it for all the balance sheet and P&L items. And once that is done, this is just only for your understanding. So this is how we conclude the audit. So once the entire audit is complete and the fieldwork is complete, the manager will give his final conclusion saying that I have carried out a review of the work papers in this section, and subject to the notes for partner's attention, I agree that the audit assertions have been satisfied. So, and the partner will also give his conclusion that based on the audit procedures performed and the audit evidence obtained, the preliminary assessment of the risk of material misstatement at the assumption level remains appropriate, and sufficient appropriate audit evidence has been obtained to form the basis of the opinion. So this is how we complete the audit. So basically, the audit documentation should not be done once the audit is over. So if we do this documentation from the inception till the conclusion, we'll not have to spend extra time on again sitting and doing the documentation from the starting to the end. So if you keep on doing with each of your audit processes, so this will save our time, and this add on more quality to our audit, and this will help in keeping the audit evidence on file, on record, and whatever we have done throughout the audit process will be documented in a sequential manner. I'll just conclude now with this.
Ishan,
Yes, sir.
okay. I think
Are you done?
Yes, sir.
Go ahead, Pankaj.
And I also take this as an opportunity to welcome Central Council member Danyava Sharma, who just checked up with me around 11:20 that he got free, can he join? But then by then sir had started. So I said, you wait and join at the closure. Thereby only one sentence because you have come. Look, IPL 2020 is starting today, and I'm a cricket fan myself. So today we saw Shubman Gill, who is the future of India, batting very beautifully with Sachin Tendulkar on the other end. And both of them have formed a beautiful partnership and have scored runs, which is beyond any opposition team's reach. I think you also love cricket, so you must have got everything what I wanted to say. Over to you now.
So first of all, Chairman, let me compliment Sachin Tendulkar, who is no other person than Murali Krishna sir, who is actually grooming Zishan to be the Gill of our team of profession. Murali Krishna sir, request you to kindly come on screen if possible. I'll be thankful and grateful to you.
My pleasure, Daya. It's my pleasure. I think it's the duty of every senior member to groom youngsters because they are the future of this profession. I think it's our duty to groom them with the value system that we all need to adhere to, and also encourage them and imbibe in them the qualities, the skill sets, and the values that are the entire fabric of the profession of chartered accountants. It's my pleasure, and I must congratulate Zishan for the excellent debut that he has made today. And going by Pankaj's cricket analogy, I think he has scored a century. And it was my pleasure to be sitting in the gallery and watching him do that.
Sir, but as a BCCI, rather I'll say ICAI, I am actually indebted to you in capacity of a Central Council member that you are actually grooming a next budding speaker of our institute. And as you rightly said, I have got groomed by all you people, and seeing this next generation coming in will make whole lot of difference. And a topic which is actually a heart of the entire profession, which is documentation. I've been part of the disciplinary proceedings last year, which I tell most of the time. And it is so painful that all our chartered accountants perform their duty very well. But unfortunately, where they are lacking is on the documentation side. My demonstration of an act done can only be done by my documentation, my filing standards, if they are maintained well. And that is how you can actually, there are two ways of laws. One is a negative way of law, and second is a positive way of law. The positive way of law doesn't help us out when it is a disciplinary proceeding, but negative way is primarily a person has to demonstrate that he is right in his way. And documentation actually plays a very important role in this entire process. And you have really touched the heart by ensuring that the next generation is picking up that critical aspect of our profession, which is called documentation, because that is what is only going to take us to the next level. Furthermore, sir, I am really humbled and thankful to you that you are participating in the work. I think in Institute's history, one more history which we are going to make it out by end of December, which we are very focusedly targeting that to make out the best worldwide forensic standards. And really happy to have you in that group, which is a core group of our Institute of Chartered Accountants of India on the forensic audit standards. And the kind of value input you are giving us, undoubtedly the fact is, if Zishan is getting trained by you like this, I think the standards which are going to come from your desk will make whole lot of difference to take it forward. And sir, when we talk about M. Bhaskara and company, I should not be naming, but the fact goes very simple. All these firms are not firms. Actually, they have actually become institutions. Hundreds of people have qualified and many people have been trained by you people. And it makes whole lot of difference. Zishan, I can only tell you, you are blessed to be getting trained by such a wonderful senior gentleman who is actually done a great value add to the profession as such. So I do not want to talk about documentation because you have at length. I was just in the last moment I was there, I was hearing the way you have taken it forward. But yes, friends, one request which is very, very important, from an institute point of view, I'm telling you, it is time that, the documentations are becoming very critical and they are the fact which is going to protect us. That documentation, that filing, that procedure, if it is being maintained, I think you can raise a collar and walk into any disciplinary proceeding, God forbid if it is there, or any regulator which wants you to come in, you can raise a collar and get in. Because your documentations is going to speak. You need not speak at all. You can just keep the file before an authority and say, look, what you want to understand, you understand. The language of the documentation, the way the filing is being done, will make whole lot of difference. If your file speaks, you need not speak, and your integrity will actually be spoken by the file, by not any other person. You need not demonstrate, you need not say that I'm a good man, I'm a good man. My good man being is primarily my file. My file has to speak. So that is where we need to move towards. And Pankaj Bhai, thank you very much for getting and doing one more experiment rather, but it is a beautiful experiment. We need to allow the youngsters to come on the pitch and bat. Looking at them, there are many people who will get motivated and inspired, and many are going to come. You have done it in GST, but with regards to auditing standards, I think this is the beginning. And Murali Krishna sir, I request you, kindly ensure that you groom and guide the branch to ensure that, we create these kind of people. Let them do mistakes on the screen within the fraternity, within our own home. And that mistakes will be learning for many other people. So let us not, Pankaj Bhai, fear about a mistake. Let us think about an encouragement which we are going to give all these people. With this, I thank you very much. I was, Murali Krishna sir, I had to go to Center of Excellence and we had a financial bid opening. Hopefully that now that part also is over and we are on the last leg of making the Center of Excellence as a real Center of Excellence in every form. So which has been done now. Let us put our fingers crossed and move forward. So because of that, I could not make it in the opening this thing. So kindly, my apology for that. I could not make it. But yes, I didn't want it to miss when you are on the screen. To share a screen with you will make a whole lot of difference. It's a blessing. Thank you very much.
Thank you, sir. In fact, the questions were mostly answered by Murali Krishna sir. I was just observing you. One question, Jishan, if you can just take it up. Okay, if you want, I'll read it out for the others. It's from Chaitanya V. Recording of discussion with clients is a suo motu documentation. Will it be a recognized document when the file is evaluated by a regulating authority? Thankfully, he is also here. Deva, if you want to answer, you can, because
Sorry, Pankaj, I was listening to some other person. Please tell me again. What was the question?
recording of discussion with client is a suo motu documentation. Will it be recognized document when the file is evaluated by a regulatory authority?
A very interesting question, rather. Again, I am telling you, there is a two ways of representations before any authority. One is a positive way and one is a negative way. Not negative way. Primarily, you need to showcase that you are a true person. So the point is basically, if the document is well maintained before time or that particular time, and that shows a sanctity that it has been a flow of document in the entire process, and it is not coming in between as a fresh document, then that document will stand good in the court of law. As per me, it is my opinion, and I am pretty confident that Murali Krishna sir also will agree to it. Because if the document which is fresh created will never stand any ground.
Ishan, would you like to say something about it?
No, sir.
Okay, I'll tell you something. If you remember, when we were talking about audit evidence, I was also talking about this. See, oral discussions, oral representations by the management are part of the auditing standards, and any oral representations, any communications are valid evidence. There is no doubt about that. There is no question about it. But as a prudent practice, we should always make it a point to make a kind of a document, written document attached to it, saying that today I had an oral conversation with so and so. These were the questions that were discussed. These were the issues that were raised. These were the answers that were furnished. These were the representations that were made. And this is my conclusion. And then send it back by way of a mail and get a sign off from the client. I think that will be the safest way to go about it. But otherwise, there need not be any primary doubt about the acceptability of any oral representation or a videographed representation by the client and the responses of the auditor to that.
Yeah, so
that's absolutely clear.
Murali Krishna sir, I think this is where the difference of experience lies. I was actually assuming certain thing in mind. You really drafted it, put it in that way of your experience, and this is right. That is what I was talking about, the documentation. So Pankaj bhai, yahi farak hai apne.
Thank you. And I think Suryanarayana says whether documentation will also include the recording of discussions with the client. Again,
Same
it
thing.
sort of, yes.
Same thing, yeah.
So I think, so before I hand it over to Deepak, one is just Sitaram Reddy. Thank you very much. You started coming. I'm happy. You are the one who is going to take over all these programs in future. Okay. So now that you have come, I will just display the certificate and you offer it to, you can just talk about it. Okay.
Chairman, can I request you to modify the certificate saying Zishan for his debut presentation?
Why not, sir? Yeah, it's
please do that. I think that will be, he deserves that for the good job he has done.
I'll
first step.
I'll take it, but most of the people, I was not very sure about his debut. Yeah. So I had done it, sir. So anyhow, I will definitely do that. Okay. Please. And Jishan, this is for you.
Thank you.
And Murali Krishna, sir, 1 second. I also have, yeah, sir, for you also, it's a virtual seminar where it's a virtual thank you for both of you. Tomorrow we will be mailing the certificate to both of you. But Jishan, I'll definitely follow the suggestion of Murali Krishna sir, and I'll instruct the staff accordingly.
Thank you so much.
Pankaj bhai, before we end, one request just come to my mind. If we are able to do one thing, like Murali Krishna sir has given us this opportunity to come on screen as a trainer, and Zishan has actually come as a debutant. At least the larger firms in Hyderabad, can we reach out to all the important firms and request every partner to encourage one of their qualified person? Murali Krishna sir, do you agree with this suggestion?
Absolutely. We have no choice. Daya. It is not a suggestion. I think, it should be a mandate to every firm that, there should be a representative from that firm making the presentation, because that way we collectively share the wisdom of all the firms, all the
Yes.
practices. Yeah.
Good
And
idea.
Pankaj bhai, ये series का नाम रख दो tomorrow, आपका favorite word, because these are the people who are tomorrow for our profession.
Yeah, we will plan that in October. Deepak, I request you to kindly.
Thank you, Pankaj sir. It was really a very informative session. The timing of seminar is also very important and very appropriate, as we are all undergoing and handling audits and undergoing this process, as rightly said by Daya sir also in the message. Murali Krishna sir, your presentation was very excellent, and the experience of more than 3 decades was shared very informatively by you to all our members. We are really overwhelmed when you accepted our invitation, and thankful for sharing your knowledge and expertise with all the fellow chartered accountants. Ishan, you was like Mohammad Azharuddin hitting the century on the first match. Your presentation was very on dot and practical. I hope you will be available for Hyderabad branch to render your services in the future as well.
It is my pleasure.
Yeah. I hope that purpose of today's webinar will be fulfilled when we improve our documentation, as rightly said by our Central Council member Dayaniva Sharma sir, that this is the need of the hour, and our documentation and file should say the process of the audit. I proudly extend heartily vote of thanks to the speaker of the day, CA Murali Krishna sir and CA Jishan, on entire behalf of managing committee for their time and session for addressing to the members. I thank Dayaniva Sharma sir, our Central Council member, for his words of wisdom and addressing all the participants. I also thank all the participants for their time and for their time spending with us and honoring the committee with their valuable inputs. Thank you, sir. We request you to kindly join for today evening session on FEMA, rules and regulations and loans by NRI by CA Vamshi Krishna from 6 to 8 p.m. Till that time, request you to take care, stay indoors, stay safe.
Thank you. Thanks everyone once again.
Thank you, sir.
Thank you.
Thank you, sir.
Bye. Daya, Pankaj, Deepak,
Thank you, sir.
everybody. Thank you very much.
Thank you.
Krishan, congratulations to you.
Yeah, yes, Jishan. Jishan, Azharuddin scored 93. It was Benson and just match against Pakistan. India won the match. Thank you.
The session is really wonderful, sir. Why? Because most of the time people will afraid to talk on the documentation, what we need to talk. But it's a hats off to the Jishan.
Thank you.
It was very engaged.
Thank you.
Thank you.
Thank
Bye.
you.
Bye.
Bye.